So we've got a summary of the forms that you can download and print out. Schedule T661 is also called Schedule 32. Okay? It'll probably only be called Schedule 32 soon. The reason it's one of the only schedules that has two names is when they renumbered all the schedules, they had all those old forms that they replaced. Remember, we said the 25 years of forms that referred to 661. So those are synonymous. The CRA will call it Schedule 32 sometimes, and yet other times they'll call it the old name T661. And what that calculates is just your expenses. It includes the project description and your expenses. There's then a Schedule 31 that includes what ITCs do I get federally. And there's cases where the clients filed the Schedule 32 but forgot to file the Schedule 31 by the 18-month deadline, and then you lose everything. Right? And the argument was, well, why would I lose everything? There's nothing in Schedule 31 that's not already included in 32. It's just pulling the numbers forward. And the answer is, it's prescribed by law. So if you don't do it, you'll lose. Okay? So you've got your Schedule 32, your Schedule 31. Schedule 49 is the one that I'm saying for the expenditure limit. It will, if it's done properly, it will list what all your associated companies are and how much of your $3 million expenditure limit exists and how you've allocated those. Okay? Schedule 1 is the calculation of taxable income. You can look at it, how we did the calculations, how the R&D pool goes in and out, and you can defer it. And then there's additional schedules for non-arm's length expenses. So if I transfer expenses to a subsidiary or back and forth or parent company, there's special forms that are supposed to accompany those transactions. Again, if they're missing past 18 months, it can cause problems on the whole claim. Okay? There's also additional Ontario schedules for the OITC, ORDTC, and if you claim the university, the OBRI credit, 20% credit on that. All right. So here's a quick overview on our assumptions of those costs. How the credits would break down. So if we had theoretical current and capital expenditures of so much, you'd calculate your total cost. You then calculate your proxy overhead, any amounts transferred, and then you'd take out certain things. Non-arm's length contracts if you had them, the 20% reduction of arm's length subcontractors 2012, okay? And third-party payments to get your net expenditures. You then calculate your Ontario credits, your OITC, your ORDTC, your OBRI if you paid an Ontario university. You take all those off to calculate your federal amount, then you calculate 35% on that, and then determine whether it's refundable, applied against tax, or carry forward. Okay. And then, as we said, the tax credits come into income, some in the current year if they're provincial, next year if they're federal, and then you're going to pay tax on that at whatever your corporate rate is, whether you're a CCPC or a Ford corporation. Okay. So the T661 form, we've gone through it. You have general information, project information, expenditures, and then statistical information.